It is the last part of Chapter 25, Professional Ethics in Accounting and Business. In this class, I will share with you the corporate codes of ethics and the ethical threats and dilemmas. So after the discussion and sharing of business ethics and their importance as well as professional ethics, is now to turn into from the corporate point of view on the codes of ethics and conclude this chapter by about the ethical threats and dilemmas. So for corporate codes of ethics, for many big organizations, like most companies, they have approached the concept of business ethics by creating a set of internal policies and instructing employees to follow them. So based on the trend, more and more companies would like to have the corporate codes of ethics in their, say, employee handbook for their employee to follow. And if you ask, what are the basis for those ethics? Sometimes they don't know. Some of the companies reply to you they don't know. They may just copy from others or from some professional organizations without considering any impacts on it. So these policies can either be broad generalizations. So just to have a generalizations of the public statements, say for example, they have the corporate ethics statement, or can contain specific rules, or what we call corporate ethics code. However, there's no standard list of content. It will vary between different organizations. As I just mentioned, for corporate codes of ethics, there's no standard rules for each organization to follow. For each country, they have their own specific law or rules or regulations, even for some industries maybe. And if those organizations is the member of the association or the merchant association of a particular country, they have their own members' rules, but you cannot tell they are the code of ethics for the organization to follow. So there's no standard list of content in this aspect. And for those corporate codes of ethics, they may contain guidelines on issues such as honesty, integrity, and customer focus. So that means for those organizations, they would like to focus on honesty, integrity, and they also highlight why they are doing such corporate codes of ethics, because they would like to focus on delivering the best to the customer. And many organizations appoint ethics officers, or sometimes they call compliance officers, to monitor the application of the policies and to be available to discuss ethical dilemmas with employees where needed. So here, I would like to share some of additional learning materials here about the contents of a code of ethics for the corporate. And there are 6 core principles here I would like to highlight with you. And these principles, they are not only referred to its commercial objectives, but the manner in which they will be pursued. For example, they may state social and environmental commitments as well as best practices that will be adopted. So for the core principles of corporate code of ethics, there's no standard list, as I just mentioned, and they can be different between organization and organizations. And most of them would like to highlight their customer focus, honesty, and integrity. And out of the 6 principles, the first principle is financing. For example, they would like to put the code of ethics on financing about how share and loan capital will be raised. and how the organization will deal with providers of share and loan capital, confirming that its published statement will be honest. So they will focus on the corporate governance, even on the financing of its capital for operations. And the next principle is customers. As I just mentioned, customer focus is one of the key elements in the corporate code of ethics. And for customers here, it may refer to the statements in order to confirm the minimum standards that can be expected from their purchases. So it's an assurance about the quality of product or services that an organization can deliver to its customers as part of the code of ethics. And they may also be interested in matters such as customer service and distribution channels, supply chain policies, and even for animal testing. So they highlight in their statements to ensure the no animal testing of their products. So it's a fair trade company as well. All these messages delivered to the customers is to ensure the customer understand about why the company exists and what code of ethics it has to follow to ensure the customer is happy or satisfied with its products and services. The next principle is suppliers. The corporate code of ethics may refer to how suppliers will be chosen and the standards to which they must adhere. It may also set down the terms of business on which suppliers are engaged. So they list out how they choose the suppliers and to ensure the customers are happy about the sources of the materials are ethically chosen through the detailed process that the company adopts. And the fourth principle from the contents of code of ethics is employees, and the code should confirm employment practices in relation to engagement of workers, including equal opportunities and diversity, and working conditions and how employees will be developed. So it shows the company is a very social responsible organization that helps to develop their employees. It's a fair environment for them to develop. And the fifth principle here is about the community. Organizations bring value to the community by providing employment and generating income, but may also have adverse effects through traffic congestion, for example, emissions, pollution, and even unemployment if the company decides to downsize or relocate. And the code may provide assurances in respect of such factors. So for community, what are the commitments by the organization to it? Shall the organization downsize itself and affect the community? The answer is no. And how to ensure it won't be happened? Then it will put a community commitment in the corporate code of ethics or corporate statement to show its commitment to the community. And the last principles here is lobby groups. Lobby groups express specific concerns relating to factors such as raw materials, working conditions, and environmental impact. The code may address such issues by stating broad policies. So all these 6 core principles will be, maybe some of them or all of them will be included in the corporate code of ethics. So what I explained to you about the principles, about what is the corporate code of ethics. So what are the purposes of codes of ethics? And there are different school of thought about the purposes of codes of ethics. Some things, the growth in codes of ethics, code of conduct, as a cynical attempt by companies to escape legal liability when an employee is caught doing something wrong. So on the one hand, the corporate code of ethics or codes of conduct is adopted by an organization is to discharge its legal liability when any employee within the organization is caught by doing something wrong or even unethical. So, hey, we have the codes of conduct within an organization, so we did all the good jobs, and it's only an incidental case that is unluckily or unfortunately to be happened in the organization. It's not about the corporate governance issues of the organization. So one thing, the code of conduct can help to discharge the legal liability of an organization, and the other point of view is about the organization trying to claim that it is not the company's fault when a rogue employee acts outside the stated rules. The code of conduct, the book, can help the company to defend in this case. Another school of thought is about the codes of conduct are simply a marketing tool that companies can use to highlight to the general public how well they behave. So as I just mentioned, they develop the product without any animal testings. So it shows them how high standards of their ethical standards or the codes of conduct that they are committed to do it. And in practice, a code of conduct will only work if management are seen to support it. For example, by holding regular seminars at the business to promote ethical practice. And the worst situation is where a code of conduct exists, but management will openly deride its contents and instruct employees to disobey it. So here is definitely an issue that should not be encouraged. And in practice, the code of conduct will usually work, especially for management support. It's quite often to be seen some multinational organizations, because the separation between the shareholders and the management would like to improve the code of conduct within an organization, because they would like to keep their job as a senior management in the organization. They don't want to have any embarrassed issue about, say, the employee have ethical issues that are investigated by the police or by any other government authority. It's not good to those senior management if those news appeared. So they try to minimize the risk of it in order to keep their job good, to run the business. So they, for the management, for those companies, management would like to put more resources to promote the code of conduct within an organization. But for those organizations who led by maybe only by one person or by a very strong man, the authoritative management style, then the codes of conduct may not be the first or the top priority of those organizations, because they have different point of view on running the business and or their interests as well. So here is the last part of chapter 25, which is on ethical threats and dilemmas. For ethical threats, there are several key threats to ethical behavior that accountants should attempt to avoid. So as an accountant, we understand that sometimes you are facing threats about your work, especially violate some ethical standard. So here would like to address what are the situations or conditions are there. First, self-interest threats. And this could occur when a financial or other interest influences an accountant's judgment. So the focus is the judgment and causes a conflict of interest. For example, by overstating the profits of a company they work for, an accountant will receive higher pay or bonuses. Then the accountants, if their salary or bonuses are highly linked with the company performance, say, for example, like the profits, then it's a risk to have the self-interest threat. The second threat here is self-review threat. This may occur when an accountant is required to re-evaluate their own previous judgment. For example, if an accountant was asked to review and justify a business decision they made, it would be difficult for them to remain objective. And for self-review threat, it can be happened not only for accountant, maybe for engineer, maybe even for the senior top management as well, because it's quite difficult for a person to say no for the decision made on yesterday or previously. And it's very hard for him or her to do it. It's the human nature. So for self-review threat, it is quite often to be found in the commercial world. And the third threat is advocacy. It can be a problem if an accountant is promoting a position or opinion to the point where their subsequent objectivity is compromised. So here we would like to use the accountant as an example again. For accountants, this could occur when acting for a client, say for a client when in litigation or disputes with third parties. So here is the accountant may have some issues in future, and so the threat is whether he or she would like to be work as very professional before the situations happen. So we have the advocacy in this case. And the fourth threat is about familiarity threats. And it can occur when an accountant becomes sympathetic to the interest of others due to a close personal relationships, and this can seriously compromise professional judgment. And this could occur if acting for clients over a long period of time, or when accepting gifts or preferential treatment from clients. And in some cases, like about the personal relationship, if the accountant and the client has very close personal relationship, say maybe some of the friends are common friends, very good friends as well, and even they get some of the personal relationship, like the daughter may be married with the client's son. So it creates a lot of conflict of interest in such case because of familiarity. Then this is a threat to the professional judgment by the accountant. And the fifth threat is intimidation threat. It occurs when an accountant is deterred from acting objectively by actual or perceived threats. And for example, if an accountant is threatened with dismissal over a disagreement about application of an accounting principle, then the accountant may consider the job or the salary, or even for example, like the fee received from the client, he may be compromised. Okay, on this case, like the new accounting principle has to be adopted by all entities, say effective from this year, but the accountant, because of this intimidation threat, the accountant may not follow the latest accounting standard. So here we have the 5 threats for all ethical threats for a professional. And how to safeguard those ethical threats? We have different point of view. First, from the professional bodies, and the second is the business or the companies itself. In response to the ethical threats outlined above, the ACCA, along with other professional bodies, have put in place several safeguards to try to reduce or eliminate such threats. So here are some examples how to reduce the threats. And first is about training. The ethics training. Ethics training for all professional accountants, both as part of their initial training and on an ongoing basis. So in other words, the professional accountant has to achieve what we call the continuing professional development, the CPD. So for example, in a year, you have achieved 20 hours CPD, the development. some of them should include ethics trainings as well, because you have to update the latest case and remind yourself about the ethical standard that you have to meet as an ACCA member. This is one example. And the second is creation of corporate governance requirements. So in those big organizations, the large organizations, they the government or any authority can create the corporate governance requirements for them, for all these companies to follow. And for professional or regulatory bodies to monitor and disciplinary procedures, they have the clear disciplinary procedures on any violations of professional rules or ethical standards. And setting of professional standards is very straightforward for us to understand. So here are the works can be performed by the professional bodies in order to reduce or eliminate the ethical threats. And for business-wise, that means the corporate can also help to reduce the ethical threats. Organizations can help to do it by the employees, by, amongst other things, having an effective internal complaints procedures that enables the reporting of unprofessional and unethical behavior. So I share with you in another opportunities that an organization can have a third party as a judge or as a part of the organization, but it's a third party that receive all complaints from the staff about the ethical issue or unprofessional behavior, and it can prepare a report, or it will report directly to the non-executive directors in the board of directors. So it helps to ensure the unprofessional and unethical behavior will be reported immediately and investigated, and also the internal complaints procedures will be more effective, because in this case the employee can report directly to the independent party that can help to minimize the conflicts within the organization. So here is the one way a business can do it, and they can also create a culture that makes it as easy as possible for employees to follow their professional codes and behave ethically. So it's quite straightforward. The senior management can create an open and transparent culture within an organization for the staff to speak up. So there are 6 values that organizations can apply in order to accomplish the safeguards against ethical threats. So first, it's about the honesty. It's about the culture. Employees should be encouraged to be honest at all times, even when this may be seen as detrimental to the organization itself. And a lot of these 6 values are cultural values. So, like the second one, the openness. This means that the organization should be willing to freely provide information as needed to stakeholders. And this should make it easier for shareholders, for example, to decide whether to invest in the business or not. So openness can help to attract more investors, because the information are transparent, and all numbers should be reported. That is open to all shareholders. They can know it, and it helps to attract more investors because they know well about the organizations, and because it's transparent. And this is similar to openness, as I said, in many ways, and indicates that a company makes it easy for key stakeholders to review its activities. And for these activities, like maybe regular audits or production of detailed reports on business activities. And the 4th value here is trust. Organizations need to be trustworthy in their dealings with others and attempt to work in the best interests of as many stakeholders as possible. This could involve, for instance, not overcharging customers. Because of trust, you believe that you sell at a fair price and reasonable price to your customers, and you believe that the customer will come back and purchase from you again in future, because trust between organization and customer has been built. So it's very important to have a successful business with that trust between the organization and customers. And the fifth value is empowerment. And this involves giving employees and other stakeholders more ability to make their own decisions. This will improve their self-image and their motivation. And the last value here is respect. All employees and stakeholders should be treated with dignity by the organization regardless of their age, gender, ethnicity, religions, or sexuality, or gender, whatever. So here, the respect is a fair and equal opportunities within an organization to everyone and respected for everyone's rights. And if these principles are part of an organization's values, and that will be the culture of an organization, so it's quite similar to what we discussed about the IFAC code or ACCA codes of ethics. So next part is, as a professional accountant, how to deal with unethical or illegal conduct. There's the steps or procedures on doing it. And if an accountant uncovers unethical or illegal conduct within the organization they work for, there is a series of steps that they should take to deal with the issue. So here are 3 steps. The first step is the accountant should first consult. So after uncover the case, should first consult with whoever is responsible for governance or ethics within the organization. So it is probably the compliance officer or even to the board of directors. So for a company with a lot of staff, they will have a position called compliance officer, that the staff can go to the compliance officer office to report the case. And some companies is not such a big organization. They will have the board of directors and the staff can directly report to the board. And if the problem remains unresolved, that is, the compliance officers cannot help, or even for the board of directors cannot help, then what should the accountants do? The accountant should take legal advice and or advice from their professional body. Because in some case, there may be a legal issue, then the accountant should get legal advice to see how to solve it. And in some case, it is like the accounting reporting issue, then may advice from the professional body is needed. And if the situation still cannot be resolved after report and consult with the professional body, the accountant should consider reporting to the relevant authorities and withdrawing from the engagement. So it is the worst case. That is, no change on the control, and the company even worse than before, even reported to, say, professional organization. Then maybe you walk away is one of the options. Another option is whether it's right to report to relevant authorities. It depends on whether the issue is violating the local law or not violating any law, but it's not legally ethically accepted. Then you can walk away from this engagement. So here's a question to review what we learned in this class. Lina works for a retail company based in country H, and she has recently uncovered that her employer is buying in goods from countries with poor labor conditions, even though they have assured their customers that all their goods are ethically sourced. This is not illegal in country H, though there would likely be a significant backlash against the retailer's products if this information were uncovered by the public. So which statement is correct? But remember, it is not illegal. So the option A is because no legal implications, so no action. So is it correct? Or B, should immediately report this to her professional body and ask for guidance. So whether should report to the professional body as soon as possible. Or third, this option C is Lina should approach the board of directors and discuss the issue with them. Or D, Lina should report to the ethical breach to the public and press, as this would be in the public interest. Okay, remember what our steps to handle ethical threats or dilemmas. First is to discuss with the compliance officer or the board of directors. If not resolved, then go to the professional body for guidance. And even if it is still unresolved, then go to maybe to the authority if it is illegal. So in this case, which option that do you think is most appropriate or the correct one to describe the situation?